So it is May 5th. We get to hear everybody talk about it. The Post, it's the only time that Cinco de Mayo, not the only time, one of the few times Cinco de Mayo has landed on Taco Tuesday. So go out there, get your tacos. We're having fish tacos tonight, trying to eat correctly, stay away from the crap that's rougher on you. Best I can, right? Hit your 50s, you got to pay attention to that kind of stuff. Hell, you hit your 40s, you got to pay attention to that stuff. It's mindset, right? If you're thinking about what you're putting in, you're thinking about your body doing well, it's all keeping the thoughts right. If you're fueling it incorrectly, you're thinking incorrectly, you're treating it incorrectly, it's responding incorrectly. That's what I understand. So that's the least path I'm going to take. Feels better. That's the path I want to go down. And I'm going to keep talking about that because why? Maybe I'll wear you down. Some bitch on the other end of this, like, I don't want the book. Well, maybe one time it'll be like, hey, get the damn book. You'd be like, okay, fine, I'll get the damn thing. Check it out. Let me know what you think. There's an enormous amount that went into this damn thing. It is a significant lift to make that happen. So it's not like these guys who just type the shit up, put it through a self-publish with just a meager paperback cover, that kind of thing. No, this is an intense amount of energy into this particular book. Just flipping through the pages, I've had a lot of compliments just on the type of paper that was used. Not really inexpensive spared that I can tell there. So this is something that and that's something I get thinking about. It's like, why would I go through all that? In fact, because that will endure. I can put a couple $100,000 into a car or something, right? There's a lot of them out there. In fact, I was amongst some the other day at an event where there was all these high-end vehicles in there. A little bit of mistreatment, those things rot and go away, right? And then you got to spend an enormous amount to keep them up. This endures, will continue to endure because there's thousands of them in print, and so that it's a great chance that those people who follow me and my family, my bloodline, they'll stumble into this potentially. Hopefully, I can't wait for the day. It's coming soon, I'm sure. If you're walking onto a plane, somebody got this in their hand, I get to ask them about it, find out if it's worth the shit. Be kind of a cool experience. I'm looking forward to that day when it comes. Hopefully, it comes real soon and it really doesn't matter when it comes, just as long as it comes. So, market. We're always here to talk about the market. And what is it we're really, really looking at? Because I'm looking at what's going on. I'm actually even asking chat, what's happening out there? Where are traders putting their money at? Right now, the money is going to semiconductors and infrastructure, energy producers, defense, and select types of healthcare. And the reason they're going there, because earnings growth is still strong, especially the AI-driven stuff. And there's a massive CapEx cycle, which is a long duration growth tailwind. At least that's what this is saying. But many of these are overbought. A lot of capital going in there. So there's a risk when you get into that overbought position. If there's a sell-off, it could be massive losses for folks. There's other commodities that are pulling a lot of that capital, especially oil in our current environment. We all understand why that is. Copper, because of AI and all the money that's got to go into the infrastructure there. Gold, major inflation hedge. So precious metals are doing that. There is... See here, other money is going into long-term duration treasuries and high-quality sovereign debt. That's what's happening when it comes to the bonds. We still see some going into mortgage-backed securities, and when you consider where its current position is compared to where it could be, that's still hanging true. Even though our rates went up a little bit in the last little bit, they haven't went up a ton. And let's think about that for a second. Think about what you're doing when you're getting a loan. A lot of times, thinking you're getting financed by a bank, they're lending you money. You're on the opposite end of a bond trade is really what you're doing. You've got somebody else who put the money into the bonds expecting a return, and you're the person going in to pick it up. Now, their money's just sitting there until such time it gets grabbed and gets used. You're waiting for the trade to come in. Let's look at these trades here to put you in a better position. So what they're getting, they're hoping to get a higher yield, and you're hoping to get a lower rate. Somebody is going to get the win. Somebody's going to be the winner and not really the loser in there because it's still going to pay out. But ultimately, you're making that trade that day when you lock the interest rate, and they're going to get that particular yield for whatever that length of time. So the investor wants long-term yield, which is your payments. You're on the opposite end of the trade, but you're locked into a long-term cost, which is their rate. And when it comes to that long-term cost, because of what's happening with the dollar, you're the one who's winning over periods of time. So when you look at this other thing, you're agreeing that when they agree to fund your deal and you agree to pay them a fixed return, everybody's in a position of win there, but you're the one that gets to get out of it. They don't. You're locking them in for 30 years. They don't get to lock you in. Well, let's put it this way. You get to hold their feet to the fire for 30 years, right? But then they can't stop you from getting out of it unless you have a prepay. And right now we have them for about anywhere from 5 years is the most common. We see some people taking smaller prepays, but you're not taking it out alone at this all. You're selling a 30-year income stream to somebody on Wall Street, whether it be a pension fund, whether it be a hedge fund, whether it be some other organization, could be banks, whatever. And your rate is locked on that return, and they agree to carry that cost for the entire duration of the deal. Now, here's the other kick-ass part of it. You're an income stream for them, but they're an income stream for you because you can use that to go out into the marketplace and secure renters. They're going to continue to pay you something that you can increase. You have the right to increase that. They don't have the right to increase you on your 30-year fixed. You're the winner in this situation. And if market gets better, you can always flip it to a lower interest rate. So you're the one who's got the driver's seat in this thing. The only thing you got to be prepared for is when do you lock? Now, let's looking at where we're at right now. We are at a lower point. Therefore, interest rates have gone up a bit from where it was at our best. Our best was way back here in February. We had some pretty good spots here in April. But when you consider where we are as a whole, we're still in pretty good spot. What did I just do here? Let me delete that. Deleting that. Okay. So when you look at us as a whole, we're still way up here. Look at the peak that we've been since September 2022. When we broke below these levels set by the value of the security the day they announced quantitative easing. So when it opened, this is when it closed. So this shade right here is that window. We have been below it the majority of the time. Look at all this time below this, and we're still up in it. We're still way up in that area. Just actually, we're not quite into the area itself. We're still just barely below it. We're at 100.34. That area starts at 100.55. So we're 21 basis points away from where that was. Now, are we going to get back up in there? Hard to say. But we also are potentially in a little bit of an overbought scenario still, potentially, because of all the other things attracting capital. I'm still thinking we're a good spot to lock because you consider all this other time here. Look at all this, guys. Look at everything here below that spot. There's this area here is below where we are now. All this is above where. Look at how much time we spent above our present position versus how much time we spent below our present position. That's a lot. And for us to think that it deserves to be up here versus the gravity of dragging it down here with all that's going on in the world, I think that might be a little bit naive to consider. Right? There is so little dragging it up and so much dragging it down. That's my thinking is, you want to make the trade now and get in that trade where somebody else can't hit you with higher costs, but you can hit others with higher costs where you're passing that cost on to. Just think about it that way. You're the person who wins in these trades damn near every time. As long as you buy a property you think you can keep reasonably rented the entire time you own it, you can raise rents on it and it appreciates. Everybody else is fixed, right? The trader who put the money up on Wall Street, the bank who filtered that through to you, us locking that interest rate for you, it's fixed. We can't increase that income. You can. Amortization of the loan by a third party, appreciation of the property, the tax benefits, the cash flows, the raising the rents, all those. You win. Everybody else is fixed. Your tenant, they got to pay the rents that the market has, period. They're subject to it. You're the only one person that's not subject to those things. You got to think about these things. You got to wrap your head around the spot where you are compared to everything else. And you're sitting here trying to juggle it and putting yourself at risk. Just get in the game and stay in the damn game. If you have questions about that, want to understand this more, get with me. Let's chat about it.